Okay, hello everybody again. Welcome to another video. I hope you're enjoying this series. We're gonna keep progressing into the introduction of what Forex is. And for those of you who are just joining us, this is a beginner toolkit where we'll be going from beginner to almost intermediate. So as an introduction, a question I get a lot of time is simply, what is Forex? Simply put, it's a global marketplace where currencies are traded. Think of it like a giant international market where people, businesses, and banks buy and sell different countries' money. So it is a global marketplace in which the currency of one nation is exchanged for that of another at a mutually agreed rate. If you have traveled outside of your borders, then you have participated in foreign exchange. So taking your home country, assuming you're using the dollar, you travel out of your country, maybe you go to Europe, well, you can't no longer use the US dollar to transact, so you'll have to convert your money into euros. That conversion of the USD to euros is foreign exchange, or what we can call Forex. So it is a decentralized network of buyers and sellers that allows individuals, institutions, and businesses to convert one currency into another for a variety of different reasons. And the reasons could be commerce, which is just trade between countries. So we trade in the US dollar, or we trade using our Kenya shilling, or we trade using our Nigerian naira. All that is Forex for commerce or for business. We also do it for tourism, which is where tourists move from one country to another. Whenever I go to Dubai, I'll have to convert some of my dollars or some of my Kenya shillings into the dirham. And another one is just purely for speculation, which is what you and I are doing, which is we're speculating that the US dollar will either strengthen or weaken. And if we pair it against the euro, then we either buy or sell, depending on the bias that we have and the direction that we think the market is going to go with regards to the valuation of the currency that we are looking at. So unlike stocks or commodities, stocks being Nvidia stock or Tesla stock, commodities being things like oil, there is no central exchange for Forex trading, right? Instead, currencies are traded via an electronic global network of banks, dealers, and brokers, and that's how you get to access the Forex markets. So you as an individual cannot access the Forex market without any of these intermediaries. So if you want to access Forex market and make some money, you do have to go through a broker, a dealer, or a bank. So as a result, the Forex market is open 24 hours a day, 5 days a week. That's Monday to Friday, unless there is some sort of bank holiday in the middle of the week, and only closes down on the weekend. However, things like Bitcoin and other cryptocurrencies, you can trade them over the weekends, so making them 24 hours, 7 days a week market. Currencies are traded worldwide in 4 major financial centers in different time zones. That's the London session, the New York session, the Sydney session, and the Tokyo session or the Asian session. The Forex market is the largest, most liquid market in the world, with a staggering average daily volume exceeding 6.6 trillion. I think at this point in time, we're probably just close to $7 trillion every day is traded in the Forex market. So all of the world stock markets combined don't even come close to this. Now, you don't just trade one currency pair in isolation. In Forex, currencies are always traded in pairs. So imagine you're exchanging your Kenya shilling for US dollars when you travel. That's a currency pair in action already. So we write these pairs as Euro USD, GBP JPY, USD CAD, which is the euro against the dollar, the British pound against the Japanese yen, USD CAD is the US dollar against the Canadian dollar, and it can be USD KES, which is the US dollar against the Kenya shilling, and etc. So the act of buying money, waiting on a shift in exchange rates, then selling it back to the market, ideally is what we call Forex trading, and this is how people make profits doing this. In each pair, the first currency is called the base currency. So if we are looking at Euro USD as an example, the euro will be the base currency, and the second currency will be the quote currency. In Euro USD, the USD, or the dollar, is the quote currency. When you see a price, for an example being Euro USD, it tells you how many dollars it takes to buy 1 euro. When you see the price of Euro USD, it tells you how many dollars it takes to buy 1 euro. So how many of the quote currency it takes to buy 1 unit of the base currency. So how do we make money? Like I mentioned before, it's all about buying low and selling high, Think of this like a business. Maybe you're a wholesaler. You buy them low from wholesale prices. Then you want to sell them high at retail prices. And that's how you make a profit. Or the inverse can be true as well. Selling high and buying low. If the price of the iPhone at the moment is $1,000, and you want to make a profit out of it, you know that you're speculating that it will go higher as the dollar increases, maybe in this country. So then you're speculating that the iPhone will go to 1,600. So you buy your iPhones early at $1,000. You hold them. The dollar price increases to drive the price of the iPhone up to $1,300. Once it gets to that point, then you sell all your iPhones, make your profits, then wait for the price to drop again for you to buy some more stock and then sell it. That's just basically how we make money through Forex trading. And there are endless amounts of methods and strategies that traders use to try to determine the true value of an exchange rate. The method that you choose to use and develop is your trading edge. It's very personal to everyone. We can be 5 or 10 people seated in the same room, all trading the Forex market, all of us making money. But a key concept is that we don't necessarily have to be trading the same thing. We can all be right, we can all be wrong. No one is right, no one is wrong. Your particular trading style or method that you choose to trade is your personal trading edge, and it's unique to you, and it's something that from the get-go you should start getting a feel of, depending on your risk appetite, your personality, and your trading style, and then come up with a method that you can use to become profitable. At the end of the day, again, this is just business. We're here to make money. We're not here to be right or wrong. So again, looking at our base and quote currencies, a quick concept to understand here is that if the base currency in the pair is going to become stronger, an example could be Euro USD. If we think the Euro is going to become stronger relative to the US dollar, then we would buy the pair. So we'd see price go up, meaning we would need more US dollars to buy 1 euro. But if we know that if we think that the base currency will weaken, or the quote currency is going to strengthen, which is the US dollar in the Euro USD pair, then we'll see price go lower, meaning we'll need less US dollars to buy 1 euro. Hence, we would want to sell the pair if that is our trading strategy. So then as we continue with this course, we'll teach you how to develop your edge, and will be based on you mastering these 4 absolute fundamental skills. Understanding basic human behavior, understanding basic mathematical probabilities. This is on an easy level, not on a very deep level. So don't be scared of mathematics. You won't be required to do a lot of it. This is basically understanding how the game works. Once you understand that, it's easy for you to progress with your trading. Understanding basic patterns and recognitions, because patterns do repeat themselves. So if we can find these profitable patterns and do that day in, day out and master it, then we can find our own edge and become profitable at the end of the day. Understanding how to transcend your own emotional reactions through strategic foresight and master planning. This is key because emotions do play a big part of Forex trading. So in your Forex journey, you will come across a lot of emotional roller coasters, ups and downs. So you will have to find ways to cope and to master the art of not being too emotionally driven, but being very objective in your trading execution, knowing when to walk away and knowing when to come back and fight, and also just resetting your mentals. So mastering these 4 skills is how you will extract profit from the market on a consistent basis. This is the journey you're about to begin, and it's a very exciting journey. And if you do like this video, give it a share, give it a like and a thumbs up. Share it with the community if you have individuals who want to learn this journey. And also, if you want to join our community, you can do so with the links down below. I also have a cheat sheet on how to get started so that you are on the right path when it comes to beginning of your Forex journey. I wish you all the best and see you in the next video.